Hello and welcome back to the podcast. Thank you very much for being here. All right, today let's talk about term insurance. So many people come to me and say, "Oh, I don't get mad, Mary Jo. We bought term insurance." Or, "I know this is really bad, but we have term insurance." And so when I'm talking to people, y'all are apologizing for your term insurance. There is absolutely nothing wrong with term insurance as a short answer to providing death benefit. If that is all that you have the money for, then fantastic. Go get yourself some term insurance. There are better term insurances than others, but if we look at different kinds, you have the term insurance that's just you pay for it. If you don't die, it's gone, right? And it's probably really, really inexpensive. So, those sorts of things that you get when you're in your 20s and 30s, keep them. Do not cancel those. Like, I don't understand why people need to save $10, $20, $30 a month and they cancel their life insurance. That is the one thing that is non negotiable. If you can't spend the $20 a month, then I sure to goodness hope that you are not going to the bar, you are not going to eat out, and you are not getting coffees. Because guess what? That is more than your term insurance, and you are going to die. That is a guarantee. So you have your term insurance that you just pay forever, right? Or you pay until you die, not forever, but until you die. Then you have return of premium term insurance. I have not heard a lot of this lately. These are older type policies that insurance companies sold. If you don't die during that term, then you get all of your money back. Typically, like I remember years ago, I had a accidental insurance and they provided that. And I'm like, geez, chances are I'm not going to die within the term. So totally okay to do that, right? So I like those because you're not really risking anything. You can kind of look at it as this big savings account. Then there is convertible term. And a lot of companies will sell you convertible term, but they won't even tell you what you have. And so convertible, and it's usually mutual companies. This is usually not a stock company, or they're bigger companies that also sell whole life type stuff. So if you have convertible term, what that means is that you can convert it to whole life during a period of time. So if you have a 30-year term, maybe you can convert it in 20 years. Maybe you have to convert it within 10. I don't know what the rules are because they change with every policy, but most convertible term has a limit to when it has to be converted. The company that I write with, the early policies had to be converted 2 years before the term was up. So if it was a 20-year term, they had to be converted in 18. Now, is sometimes, these companies, they'll convert to universal life or to variable life or whatever. So they're not told they have to convert to whole life. So if you have term insurance that is convertible, what's nice is that saves your health rating. So if you've had cancer, for example, and you are now non-insurable, but you have this convertible term, you can convert that to whole life with the rating that was on that term insurance. New age, it's whatever your age is today, but you can convert it with the health rating that you were at the time you got that policy. I sell a lot of convertible term insurance. Now, I used to not. When I first started, I was like, term is bad. We're all going to hell if we buy term, right? But it's not a long-term solution. So I do a lot of convertible term if, let's say that somebody wants more death benefit and they just can't afford it through whole life. Well, then we're going to put some convertible term on them. Let's say that they have bad family history. Well, we're going to put some convertible term on them. Or what if they came back with a not so good health rating? And, we're like, geez, your health rating just isn't like superb, but you're even lucky you got insured because chances are this is whatever it is you have is going to get worse and you're not going to be insurable at all. So let's just do some convertible term. Let's lock in your health and then we'll convert it to whole life as we can afford to do that. Or I might have somebody that, the husband or one of the spouses, we're going to do whole life on, but we don't have enough premium money to do whole life on both of them. And so we're going to do some term insurance. A lot of times that happens, if we're in our early 20s where we just don't have enough money to buy a minimum death benefit, and it happens in our 50s. It seems like it's either really young or older to where we don't have enough money that we can do policies on both people that are whole life. So I will do term insurance on the other spouse with the plan that we're going to convert in 10, 15, 20 years. Now, in that case, if I'm going to be doing term insurance, I don't want to be buying a 20-year term if I know I'm going to convert in 10. So I'm going to buy a 10 or a 15 because of that. Or here's another time that I use this is we're doing insurance on mom or dad because we want that generational wealth to start, or we need as much death benefit on mom or dad because we have a business to buy out, we have a farm to buy out, whatever that looks like. And so I want to maximize my key man buy-sell insurance. So I'm going to do term on myself so that I have as much money on the business partner, on mom, dad, to maximize what I need to maximize upon their passing. So there are times where we're going to do that. But if we do a buy-sell type thing, I might say, okay, we're going to do a 10-year or 15-year term on me. And then I'm going to convert that at year 11 or at the end of year 10. And so I use it as part of a strategy, and it's there for a purpose. Unlike term insurance that you're buying, and you're buying it for a purpose of death benefit, but there's nothing else with it. It's just term insurance. And that is typically what your Dave Ramsey, Susie Ormans, that's typically what every life insurance agent in the country is trying to sell you because it is cheaper. If you have read my book, you will understand that term insurance is not cheaper per dollar a death benefit through your entire life. And it's always funny because your gurus will say, well, you don't need insurance after 65. With the national debt we have, with the inflation we have, with the fact that our parents today are having to co-sign or take personal loans for their kids to go to college, the fact that you think that there is not going to be debt at 65, what you smoking? That's what I want to know. Because I want to know these people that don't have debt, that don't have expenses over 65. What in God's green earth do we think we are doing when we tell somebody, oh, you're going to be debt-free at 65? Are you? You barely will have enough money for retirement. You still have taxes to pay. You still have groceries to buy. You still have all these expenses. But you're also supposed to then what? Save for your funeral? I mean, where does the funeral cost come from? Because if our insurance ends at 65 and we die, and then we have our kids are supposed to pay for our funeral, is that how that's supposed to go? Because last I checked, you're supposed to be responsible for yourself. So term insurance, your traditional term insurance is great, fantastic for a short-term look. It is not our long-term lifetime answer. Less than 2%, this is what I've heard. Haven't actually found a number because everybody's numbers are skewed, but anywhere between 1 to 2% of term policies pay out. So it's so funny to me when people say, oh, life insurance companies are just getting rich off that whole life. They pay when you die, and you're going to die on their watch. Term insurance, though, What a great moneymaker for life insurance companies because there's only a 2% chance that they're ever going to have to pay out on that claim. That is why it is so cheap because you are not likely to die during that period. You are likely to die over 65, which is why when you buy term insurance, it is so expensive over 65 years old. That is why when I look at what it costs us per dollar of death benefit, term is more expensive because you rebuy it at 65 or 70. And then it's just outrageous and you have no cash value. You have absolutely nothing to show for it. So is it beneficial? Yes, if you have convertible term and if you convert it. You can't just have convertible term and not convert it. But if you have to buy term insurance, ask if it's convertible. If it's not, then you're just throwing money away. And with convertible term, you're kind of throwing money away too. You're just saving your health benefit or your health rating. But if you have regular term insurance, don't be embarrassed by that. My gosh, at least you have something. Because guess what? Most people don't have anything. And it's ridiculous that their kids are paying for their funeral. Who do you think pays for that? The government isn't paying for that, meaning we're not paying taxes for that. We pay taxes for everything else. You're supposed to have health insurance. That's something that's regulated, right? If you don't have health insurance, we're going to, fine you. But you don't have to have a death benefit. No big deal. Who's supposed to take the heat of that? The funeral home? They're not going to bury somebody for free. The churches want to get paid. Come on, people, let's think about it. Term is good because we need to have some protection. Convertible term is even better. Whole life is the best, but we have to be able to fit that into our finances. So if you need to go the term insurance route, try to do convertible. If you have to just do term, fantastic. Go get yourself some life insurance because that piece is super important if something happens to you. Okay, I started out pretty good, then I got kind of rambly. Y'all get the point either way because you follow me and you're all squirrels, obviously, like I am. So let me know if you have comments, questions, concerns. Do not feel bad about your term insurance. Figure out what you have. Don't cancel it. Unless it's unbelievably super expensive, there's no reason for you to be canceling it because it is there for protection. Mary Jo at withoutthebank.com. Go to withoutthebank.com, grab your book, set up your appointment. Let's have a conversation. I look forward to it. All right, guys, have a fantastic rest of your day.